Good morning, everyone. We meet once again. This is the weekly update. This is the first week in September, and we've been waiting for this month or the last quarter of this year since a very long time. There is a lot of update that we can discuss. Today, I would like to remind you that there is a bank holiday in US and Canada, Labor Day. So the volatility is going to be totally different, and it's going to be a thin liquidity eventually in the market. So you need to be careful if you're trading big lots in the market.
Let's half day.
Yeah, so Nour, we've noticed that since last week, okay, the major trend on the dollar index, we always start with the dollar index. The major trend on the dollar index is down, but dollar index did a nice correction from 100.5 to almost 100.6. 101.6, so almost a full point over here, and the market got affected, and we've seen some corrections on other currencies at the same time. The market is still pricing the same interference from the Fed. Nothing has changed so far, so this is quite normal. That's just a simple correction on the market. But what I wanted to discuss and like highlight is basically indices. Indices took advantage of this, and Dow Jones made a new high compared to definitely S&P and Nasdaq. So
Correct.
Tell me, why Dow Jones?
Here's the thing. I mean, the indices in general, we did. If you look for, there's some sort of rotation still going on. Even with Dow Jones at record high, S&P and Nasdaq failed to do so. I mean, if you look at the closing, or even if you look the entire week of last week, S&P failed to do or failed to break multiple times. Nasdaq is the same thing. We finally had Nvidia's earnings, which a lot of people thought that once the earnings of Nvidia is out, the trend will continue because Nvidia is very important. Nvidia is very important, but at the same time, one company can't basically just save the entire market, or that the entire move will be based on one. Back in 2020 and after the COVID, yes, there was 7 stocks that basically has led to the market to recover. But this time it's totally different. Now, Nvidia's earnings were good, mostly I would say in line to beating expectations, but at the same time, the stock went down by 10%. And if you ask why, because investors were very, very, very optimistic, maybe over-optimistic. So this is why basically in addition to that, Blackwell, or according to the company, the next cash cow, if I may say, for the company, which is the Blackwell chips, they basically announced and said it's very challenging to manufacturing. So this has eased basically market expectations, at least for a very positive impact. And I think it's still Nvidia. It is something that people would need to look for on the longer run. Dow Jones breaking new high. It is still within the rotation that we're seeing, but at the same time, I'm still waiting to see at least some signs of another correction. And don't forget something: the end of the week or end of last week was the end of the month flow. So the move that we saw on Friday and Thursday might not actually continue the entire week.
Exactly. And so basically, you agree with me when we can say now about the market that there's an overreaction almost on anything, not just Nvidia, not anything. Like there's always a panic or overreaction or over positive or whatever is happening in the market. There's always an overreaction. So that's why we always emphasize and say that we need to make sure that we use our stop losses to do a proper risk management in our portfolio to maintain the growth of that portfolio. So technically, if we look at the charts, we notice that the 3 indices are totally different between double top and new high. If we continue and look at other charts at the same time, let's take a look at gold. Gold kept the trend up. We're trading before above 2,400 at the moment, 2,497 or 98. So it's still positive. We closed the month with gains on August, same as the previous month as well. So is it going to continue? Do you think gold will continue with its trend? Okay, we do agree that it's too high. and
Yeah.
no one's gonna risk, because the risk reward ratio is totally crazy from here. But it seems that the market is pushing it, right?
I'll tell you, you just said like no one will risk. I can tell you, there's a lot of people would be, ready to risk, their money to buy gold at the current levels. Although I don't think it's a great idea, unless if you're basically looking for a very long term hold.
Is it still a safe haven at the moment,
I mean, gold will always be a safe haven if you know how.
even at these levels?
I mean, even at these levels for the long run, yes, because at some point, I think, go back in history and just zoom out on the chart of gold. Very few years we saw that decline, when it went to 1920, and then we went all the way down to 1040. And that was when there was no inflation, it was growth, it was recovering after the financial crisis and all this kind of stuff. But would I actually buy gold here? No, I would just still be interested in seeing any kind of. I mean, alternatively, at least for the
Safe
time
haven
being,
alternative, I mean.
as a safe haven, you still have currencies. You still also have like other assets such as silver. Silver is still cheap, and I still believe that silver is basically undervalued. And it might be a little bit, if this is the right word to use, which is like maybe suppressed even. For whatever reason, for currencies, you still have the Japanese yen, you still have the Swiss franc. Even even with the US dollar decline, it is still also considered as a safe haven, and we've been declining now, since over like 3 months now, and we did touch 101.60s, which is very important support that it has been holding since over 2 years now, and that could be another reason for for traders to even look into it, because the more that we get closer to the Federal Reserve to start cutting rates, the more the market would already priced in such policy. And this might be also the dollar index might be at the end of its downside. So for those who would think about safe haven, the dollar index is one of them too.
Okay, this is very important. So basically, if we look at the history, historically, what we've noticed from the market is that every time before we reach to a certain cut or a certain decision from the market, there is a pullback or there is a counter reaction of the market. So now the trend is down for the dollar index. We totally agree on that. Before we reach to the decision itself, usually we see the market reacting up. So when we get to the decision, we're back to the same levels. Eventually, this will affect all the currencies as well and the commodities. I want to discuss oil before we discuss dollar yen, because you mentioned dollar yen. Oil did bounce back, and we're almost at the same levels or at the same lows that we reached before. This is almost a triple bottom where we are at the moment on US oil. I'm saying we're trading about 73.80, 73.90. Is it still considered as a nice safe haven, or at least in a certain percentage?
I would have said like a safe haven, but it's a good. It might be good, risk reward when it comes to the decline that we saw last week. It was also because there was reports that OPEC will go ahead with their planned production increase as soon as October. But to me, this is basically a reaction of what's happening in Libya, because Libya is basically cutting all the productions. That was until Friday because of some political agenda there. So that was basically for OPEC to say we were going to start in October. This is basically because somebody needs to cover what Libya is producing. At the same time, earlier, I think during the weekend, there was an article saying that they will actually restart. They will restart their production as early as this week. So even though that we saw decline in crude oil, if you look at from a technical point of view, we're still holding some very good levels. Whether you're talking about Brent crude or West Texas, it could be still a very good risk reward going forward.
We're near the support. That's why.
Exactly. I mean, as long as we're near the support, and as long as you keep trading above the support, there is no. I mean, your risk to long oil is still minimal compared to when you would basically would buy or shorting at these levels when it's basically at a solid support that has been holding since over 2 years now.
Okay, in less than a minute, let's discuss the move of dollar yen. We've seen that dollar yen did not continue with the trend down. When we reached the level of 143, 144, it's like the market was telling us it's going to continue to 141, which is the previous low. But with the strength of the dollar again and bouncing back from 100 or 100.5, this gave a bit of edge or leverage on for the dollar against the yen. But the trend on dollar yen is still down. The trend on dollar index is still down. So whatever pullback at the moment is considered as a correction and as a good entry point for the ones that would like to short it.
Yeah, I mean, I couldn't agree more. You have the 144. Which basically we kept trying to break under multiple times. I mean, if you just open the chart and just put a line at 144, you'll see the body of the of each of the candles over the past maybe three to 4 weeks. Each time we try to break underneath it, we see a lot of volume, which basically could be translated into some buying opportunity there, and there's still some investors that would love to keep the dollar yen. Keep the dollar yen higher, but I think about somewhere between the 147, 148, or maybe even like the 150, maybe even to 150. It is a possibility to get there. Just be mindful that dollar yen is not as it used to be before. The move of 200 and 300 pips a day, it is actually possible, and with the policy that the Bank of Japan is looking to implement going forward, that might actually even push dollar yen even much lower than 144 and even much lower than 140.
Lovely. All right. Thanks a lot, guys, for attending. We are gonna answer all your questions in our next session.
I'll see you next week.